going to talk today about where the ball is about to bounce. So I'm interested to hear from all of the panelists here. If we would start at the end, tell us a little bit about who you are, what you're doing for a living, whether it's independent or family office or fund management and so on. And then we'll start talking about where this ball is about to bounce.
Thanks, Gillian. So I'm Noémie Aliel, the founder and managing partner of ADIV, which is the fund that is deploying early stage capital in aerospace and defense startups, most of them based in Israel, where I live and where I'm from. It's also connected to a larger advisory group called Starburst. I'm also the managing director of Starburst Israel, which engage very early with defense prime that are looking to bring disruptive technologies into their product lines. And Starburst has built one of the largest ecosystem of aerospace and defense players, including investors, governments, and corporates that all want to have access to our early stage deal flow. Oleg?
Hi everyone, my name is Oleg Bibergan. Thank you for to the organizers for having me. I'm a co-founder and managing partner of S16 VC. We're a global founders fund and multi-family office for tech founders, bringing together over 200 founders as our LPs and partners, all the way from names like founders of Miro, Datadog, Supercell, Bolt, Volt, Hugging Face, and many other companies, as well as institutional partners like Sequoia, DST, Atomica, and many others. We also have a multi-family office that is working with tech founders. So from that perspective, I think we sit in a pretty unique place. As a fund, we specialize in early stage, but as a multi-family office, we specialize, well, in wherever the tech founders are interested in deploying. So a lot of insights, both on the private markets as well as the public market stuff that I'd be happy to share. Thank you.
Good morning and good afternoon, everyone. I want to just first thank Yuri and the team for putting on this wonderful event in Lisbon. Seja bem-vindo para Lisboa. I speak Portuguese from Brazil, so it's a little different, but enjoying being here. I'm Russell Deacon. I'm the founder of my single-family office, Asiana Group. I was also one of the first foreign partners actually in a Latin America venture capital firm, so I've been investing in technology for pretty much 25 years now, and now I continue to invest still in technology, a lot of early stage investments, co-investments. We invest internationally, probably 60% in the US, where I'm based in Miami, and then we invest also in Europe, India, Singapore, and Latin America, and look forward to continuing this conversation with my fellow panelists. Thank you.
Thanks for inviting me here. I'm Nevşah Fidan Karamehmet, a serial entrepreneur, investor. My background is behavioral health sciences. I'm a very well-known expert in human behavior, public speaker, best-selling author. I'm an LP, an angel investor. I'm from the Karamehmet family, who are the ex-owners of Turkcell, and I'm managing the Karamehmet family's tech investments. Thanks.
Great, I appreciate it. Excellent. So let's start off with some interesting questions here. Again, we'll just start at the end and come on down. I would talk about this concept of where the ball is about to bounce. So let's start with, what are you investing in today? And then we'll get to, what are you looking for to invest tomorrow? What do you invest in today where you say, this is going to make capital now, or it's going to take me 5 years to get out, or 10 years to get out? What do you see?
So for our sector, which is aerospace and defense, it's a long sales cycles by default. So what you invest today, you'll see it in the market maybe in 5 years, 6 years. It has to be going through a pretty thorough validation process. The way we found to sort of make this process shorter is by engaging with defense prime very early on. They are the ultimate customer that will take interesting innovation coming from the startups and mature them to then be sold to the military or wherever it needs to go, to the Ministry of Defense. We've done so far to date 34 investment pre-seed. So we invest exclusively in early stage. We like to be the first check. We are comfortable with the risk that comes with early stage investment. Out of those 34, more than 40% raised their next round of funding. In terms of sector, what we see is sort of the trend and what the industry is demanding is autonomous system, very hot. Anything that is GNSS denied, think about, you know, jamming, all the things that you have on the battlefield that needs to be resilient. Anything that's connected to satellite optical communication system. We see a lot of trends around mobility, the mobility transformation, a lot of demand around energy. This is big, not just because of AI, but also for airplanes. And last but not least, we've also seen a shift in the defense supply chain, which is sort of being realigned after all the post-geopolitical shifts that occur. If we're talking about the war in Ukraine or the one in Israel, each country is sort of ramping up to be sort of self-sufficient, less dependent on other nations. And so you have this entire supply chain, which is a huge topic that needs to be addressed. And so we've also been investing a lot on manufacturing capabilities, if it's new materials, ability to view or do structural inspections of materials so you're not dependent on what is being shipped.
So drones are big in the current marketplace and the news cycles. So are you investing in the drone technology or the security against the drone technology? How are you looking at that particular subfield?
All of the above, Jillian. It's anything that touches the aerospace and defense value chain, we invest in. So it's a pretty wide sector. You need both solutions, drones and counter drones. I think the big topic of what's going to come next, I think that people are afraid and they're looking to invest in, is anything that can help you deal with swarms of drones, which is just not one or two, but let's say hundreds. I think there's no good solution right now in the market that can help any nation protect against a swarm. So if there's any entrepreneurs or founders doing that, please come talk to me.
Okay, now you know where the ball is about to bounce. Okay, you're up.
Yeah, thank you, Jillian. By the way, we didn't hear your intro. I wanted to make sure that we also hear from you.
I promise I'll get to it when we get
Awesome. All right. Yeah. So look, on the early stage side, we are very excited about AI application layer, and the way we think about it is sort of verticalized. So we're, out of our fund 2, we've already made actually 35 investments as well. Over the last 2 years, we're averaging about 1 investment a month, and you name it, we have it. AI lawyer, got it. AI accountant, got it. AI developer, software developer, got it. AI skincare specialist, got it. So, basically the AI transformation shift of at the application layer is something, we're excited about. And when we go early stage, for us, one of the defining characteristics is backing serial entrepreneurs who are building their next startups in the AI application layer. And we like to be as early as possible in a similar way, like, first check, perfect for us. So that's on the very early stage side. Like I said, we also cover other areas as well. The one interesting sort of new, I would say, almost an asset class, maybe a new genre of what we're seeing with the whole AI transformation is AI roll-ups play, which is a merge of private equity playbook and venture playbook, where essentially you're looking at product companies, AI first product companies that are looking to transform knowledge service sectors like accounting, like tax prep, like lawyers, etc., by buying out the actual agencies and practitioners and companies, and then essentially applying a private equity playbook as a go-to-market machine. So we have a company in the UK, for instance, called Dwelly Group, that is doing that in the lettings agencies space, property management firms, scaled to close to 20 million ARR in just the first year. Another one in Spain in the accounting space scaled to 10 million ARR within 1 year. Extremely capital efficient, and the play is to EBITDA margin uplift and deliver organic growth by moving these boring, verticalized, manual, very much manual service businesses in fragmented sectors onto AI rails and supercharge the productivity, of those companies. So that's kind of the middle layer in the private markets, AI rollups. And then finally, through our multifamily office, we're looking at the picks and shovels of AI economy as public place. So it's things like nuclear, things like solar, where there is a wall of AI capex, especially in the US. We're talking trillions of dollars coming in. What do you actually need in terms of electricity, in terms of engineering, in terms of components to unlock that capex?
About water.
Water too.
Water,
That's a
they're
good
not
idea.
making
Haven't
any
looked
more
at
of
that.
it.
Yeah. So these are the three big areas: early stage, the sort of PVC hybrid playbook AI rollups, and the picks and shovels on the public market side.
Excellent. So you just heard that he's investing in solving boring business problems with technology. We've been saying that for about 30 years. So everything old is new again. You're on, Russell.
So it's interesting. So there's a famous Canadian hockey player, Wayne Gretzky, which I assume many people here know, and he always said, you need to skate to where the puck will be, not to where it is. So, but there's a combination of that. So I'm going to give you some ideas that is where the puck's going to be, sometimes can be a continuation of where the puck has been. So we, as I mentioned, we're a single-family office, so we generally invest in funds, and then we do co-investments with fund managers over the years. So two things that we've done in the past and think it's going to be still good, and then two new ideas. So the things that we found a family office that actually has been investing in biotech since 1989, has invested, created 5 unicorns, 1 decacorn, and now they've decided to do their own fund for friends and family. So we've been investing with them, and we'll continue to invest in that. So that's something that I think works very well. Another thing that we just done recently, we decided, and we've been investigating this, but now we think it is the time, for example, for India. We've decided on a personal level, we've done research in China. We didn't like the political risk. I may be right for the next 10, 15 years. I may be wrong 50 years from now, but we've decided we're a British family, so we're used to emerging markets, but we really think this next decade is India's decade to shine. They've been very good at technology. I went to business school with technology friends, and we've invested in some good managers there. Another example of something that we believe is a good moment now and for the future. We found a family that, believe it or not, is 3rd generation. One of his grandfather had the first liquor license after Prohibition in Chicago. Oh, wow. And actually swept the floors of the store of Al Capone's liquor store. Yeah, interesting. But
That would be an interesting job. Yeah.
Long story short, he's now on his 5th fund, but we think it's going to continue. So he's actually doing something we believe is completely non-correlated to the market. He's investing in the beverage industry and whiskey barrels. So believe it or not, it is like trees. They age very nicely. Over 3 or 4 years, they get more and more valuable. And the distillers all buy the same raw barrels and juice and put it in the special spices. So something very uncorrelated, very good cash flow, and very good returns. And then something believing where the puck's going to be, what's happening. We found a manager. If you look in the United States, there's 2 imbalances. One is at the cradle, and one is more towards the grave. I don't like to use that word, but so in the U.S., there's not a very good national policy on early stage education. I know that because that's something else my daughter's doing. So we found there's a very big imbalance. 8.3 million units of capacity supply, demand 14 million units for creating early stage preschool education centers. So that's going to be a continuous problem. We've invested in that. On the other end, towards the end of the life, by 2040, most likely 30% of the population will have mild, modest, or severe form of Alzheimer's dementia. So we've invested in a fund manager that is investing in the mom and pop stores focused on patients with Alzheimer and dementia, and taking the playbook from private equity, which has been for healthcare centers or dentist shop, using a 100-day model, improving the statistics, and using that, and basically then going to do a roll-up and sell it to the large asset managers. So those are ideas that some of them take a continuation going forward, and others that we think we're ahead of the time. And that's something we've done, geographical areas as well as specific targets.
That's a very interesting take. What we're hearing is that it is not only technology that you're looking at and the future of what the next technology will be, but rather revisiting the, if you will, real world.
Yeah.
Right? So again, it's kind of the boring business problems, but you're looking at that as a diversification of investment for the future. Very interesting space. Okay.
We are very excited around longevity, health, wellness, health tech, biotech. And as a family and myself, I think that's my bias as well because of my expertise. We like looking at the picture holistically and also thinking long term, even if it's startups and tech. And I like and we like asking questions like, and this is going to probably bring a different perspective to the whole group. We like asking questions like, because people talk about AI, transformation, AI, but I don't think we talk enough about where is humanity leading, where is humanity going with all the AI transformation, because that's a serious topic we need to be thinking about, and that's in the basis of our investment strategy. Because in 10 years' time and 20 years' time, which is the fastest growing market anyway, longevity and health and wellness market, it's going to be much more important, because when you look at humanity, what's happening with humanity, how are we going to cope with AI in 10 years' time? We have to become superhumans. So right now we are very excited in technologies that is going to help us become superhumans.
So give us a couple of examples of what is a technology that helps humans to evolve with this AI.
All health, biotech, everything to do with biohacking, everything to do with wellness and health and cure and yeah.
Okay, interesting. So we're not only going to hack the technology, we're going to hack ourselves as well. So my name is Jillian Music, and I'm the general partner at Masters Fund. We invest sector agnostic or industry neutral in companies that have at least one woman at the helm. Women have been returning an average of 35% higher ROI to their investors in both the public and the private markets for more than 30 years. So we know past performance is no promise of the future, and correlation isn't causation. But we took a look, and the women are outperforming. So far, so good. One of the things that we invest in over at Masters Fund is every single piece that was talked about here today. So really, rather industry neutral. But it's interesting to note that we're all thinking aligned, right, about where this ball is about to bounce. Certainly, it is focused on AI and how that's going to transform what we're doing, but it doesn't just transform the speed or maybe even the price of doing something. It actually frees humans to do other things. The question is, what are we going to do there? So let's run down the line again. What are, as you make your investments, right, what are the humans going to be doing in the future, right? We used to send the men out in rows to be mowed down one at a time, right, line by line. And then there was guerrilla warfare and so on and so forth. It changes over time. You're in the defense industry, investment space. What are the humans going to be doing as these new technologies for defense and offensive warfare take place?
It's a very interesting question, Jillian. I think the first thought that comes to mind is Anduril, which most people probably in the room have heard of them. They're one of the leading defense contractor in the US, and their entire mission is to make the modern war fighters, to give them an edge by enabling them through AI, through autonomy, through whatever software they can do. And so it's actually also linking to what my previous panelist said about biohacking. So they have these like goggles that they call the IVAS, which gives supervision to the people on the battlefield, so they can see through nights, they can see through walls, things that typically is reserved for machine, and now you're gonna empower humans to do. So I think in our sector, about 80% are using AI. If there's a software, AI is involved every time. The 20% that don't have AI is either because they don't have software, so we sometimes have investment in just pure hardware. Like I'm just thinking about one coming from India that they're building cryogenic tank that has interesting composite materials, and it can be used for propulsion, it can be used for underwater, like many use cases. And so the human will be controlling the machines that are going to go to the battlefield as opposed to putting their lives and themselves at risks. And they will develop those solutions. Some of these solutions will be semi-autonomous, so the machines will be there almost like a co-pilot to help them, but some of them will be fully autonomous. So think of it, somebody in a room pushing a button, and then the drone goes and do the mission and come back. So it's a very scary, but also exciting.
It's no question. What I'm driving at then is, will we literally need fewer people in the Army and the Navy and the Air Force? Literally fewer humans? Yes or no?
I don't think it will be less. I think they will be repurposed, right?
Okay.
Different roles.
Okay.
So you'll still need them, but they will do other things.
Right. So let's go down the line and say what you're investing in, what are the humans going to do next? Are you going to need more of them or less of them? Right? Let's think about that as we go through. And then who's investing in the education that's going to educate that population to do these new things, whether it's military or business structures or logistics or health and wellness and longevity, whatever it is. Are we educating that next generation to do what it needs to do?
Yeah, look, that's a topic we're thinking a lot about. I think as capital allocators, we talked about the early stage being a place where you invest, with a perspective of an exit in 10 years' time. So you need to be able to visualize what the world looks like in 10 years' time and make a bet, essentially, which is what early stage is all about. We operate on, a belief or a bet that in 10 years' time, we will all have access to infinite AI agentic workforce, which will be sold at the basically, cost plus cost of compute and electricity. And when we're making the bets today, we're visualizing what that looks like in 5 to 10 years' time in terms of that AI plus human collaboration. So, when we talk about, I think one area very specifically to talk about here is what we see in AI roll-up space, which is where, taking a lot of boring businesses and SMEs and transforming them into operation at startup speed with AI. Actually, what we see is that the workforce at these companies is not being reduced at all. In fact, they are hiring more, but the margins nevertheless are growing in parallel. And the reason that is happening is that at today's level of AI, the best use is automation of boring things that people don't want to do anyway, that frees up people's time to work on higher value-add workflows. So in an accounting firm, it means that the accountant in charge, instead of filling up invoices and preparing documentation, they can, for example, focus on strategic advisory of their clients, setting up trusts and doing other things which they simply wouldn't have time to do before. So that's kind of the first point. The second point is that in a lot of these sub-industries, there is just not a next generation, talking about your question, of people ready to take up, because very few young people want to be accountants. That's just a fact. Not too many want to be tax preparers. Again, that's just a fact. And so there is actually a huge backlog of, demand that is not covered by supply. And I'm sure everyone who has to deal with complex tax globally and, can raise their hand and say how difficult it is to find an actual, trusted party, trusted provider. So, to wrap this up, I think, we think about AI-human collaboration, freeing up, certainly for the next 5 years, freeing up humans from boring tasks and applying AI at that last mile to deliver value.
Okay. I think we are counting on a workforce that's not yet prepared. We only have a few more minutes, but you're on.
So we've invested in an AI fund. We've done some co-investments. But I wanted to bring up a point that perhaps we haven't talked with regards to the panelists. Just a bit of history context, which I think is important. So I'll go give an old example and a more modern example. So at the end of the 19th century, there were 100 car manufacturers. If you invest in all of them, today, there's really 5 left. So you had a 5% chance of really making a lot of money. Then we came into the internet. We were very early investors in the internet. I was a venture capitalist at the time. We were lucky enough that we had a very good hit, but most of what we did not work. But the ones that we did made up for it and then some. So the percentages are very low. So the key is, I think the trends are easy to figure out. I really do. And I thought I'd only have one in a lifetime career chance when I saw the internet. But then blockchain came. And I thought that was the next one. And now AI's come. So there's all career-defining moments that come along a lot more often than sometimes we think. But then the key is really to invest in people and find people who can really execute. So there's going to be a lot of, for AI, there's going to be a lot of losses. There's going to be, how do you evaluate? If you look at NVIDIA right now, that's obviously a public example, $5 trillion. Is it really worth that? I think that's an open debate. And there's other, OpenAI, et cetera, et cetera. So what I'm getting at is the point, it's so important to really, and we've decided to go earlier stage, to really find people looking more at the picks and shovels, because that is what you really need to look at and try and de-risk that. Otherwise, you could be the 95% of not doing well. And then there's a social component of the AI. If you look at the Gini coefficient, which is basically looking at the disparity between the wealthy and the lower class, we had perhaps an anomaly after World War II until fairly recently, used in the US and the West, where that Gini coefficient diminished. We had a huge rising middle class, first in the US, Western Europe, and then developed. I think that's changing again. I believe that the AI is going to cause the increase in disparity, because what are the people going to be? There are going to be people, just like Oleg said, that are going to work more on strategy. There's going to be the elite, the educated, who are going to be lucky enough to figure it out and use AI as a tool. But there's going to be a lot of people left behind. Is that going to create social unbalance? Are we seeing it now in Europe? All of these questions. So it is a double-edged sword. There are some serious concerns that we are not thinking about. We need to create guardrails. I think there's opportunities, but things are happening at a very quick, accelerated pace. And I don't think we're really thinking about that, because if we lead to more social, let's say, disgruntlement, difference, more higher unemployment. I just read in Europe it's increasing. In England now they have the highest unemployment. We need to be very careful about this with AI and the long-term consequences for us as a society, as an investment. That's a very complex question that I don't think a lot of people are thinking about.
Russell and I are going to be here all week talking about it because I've got 1 minute left. It's your turn.
I'll just continue from where Russell left. I fully agree with all of our panelists and coming to AI and where we're heading. I fully agree with Russell as well. I don't think we are thinking enough where we're heading as human beings. But when you look at history, throughout history, only 1% of humans have been able to master all areas of life. So only 1% right now is above AI, able to govern health, wealth, relationships, all areas of life, genius, high IQs, highly wealthy individuals. 99%, they're still having issues on governing areas of life. So with AI, what's happening is AI will take care of any area people are not able to govern themselves. Mm-hmm. And 99% are doing a very poor job. So if it goes like this, how I see in 10 years' time, 15 years' time, we'll probably have millions of people just sitting in their houses watching TV all day and us bringing them food, and then the robotic
Welcome to the Midwest in the United States. Yeah. They're already
we'll
doing it.
Yeah.
So I leave you with this thought. Trotsky said that revolution is fomented on the empty bellies of men. And I think he's right. And I think we're moving more quickly to it than we like to think. Russell touched on it. You've touched on it as well, right? We're all looking at that. The discrepancy in wealth is critically important to address, and that's some of the places we should all be looking to invest. Because where the ball bounces next is living in a world that is hotter, there's no water, and the people have no work. That is dangerous stuff.